Hello and welcome to Policy Pulse by Ralph. Today we're looking at a major development in the payments space that could reshape how credit card rewards work and why it matters for consumers, merchants, and the broader economy. If you're new here, hit the subscribe button, ring the bell, give this video a like, and if you find the content useful, comment and share with someone who cares about financial policy and payments. According to a report in the Wall Street Journal, Visa and Mastercard are nearing a settlement with US merchants that would lower interchange fees and give merchants greater flexibility in deciding which types of cards they accept. Here are the key points of the proposed deal. Merchants would see a reduction in credit card interchange fees, presently often between around 2% and 2.5%. by roughly 0.1 percentage point over several years. The card network's rules that require a merchant to accept all cards of a given network if they accept one could be loosened. In other words, a merchant that accepts one Visa card might not automatically have to accept all Visa cards under certain categories. Acceptance may be broken into categories: rewards credit cards, non-rewards cards, commercial cards. Merchants might be allowed to reject premium rewards cards that carry higher fees. What does this mean for consumers? If merchants begin rejecting premium rewards cards, i.e., cards that offer more points, miles, cash back, but cost merchants more in fees, you might face situations at checkout where your preferred rewards card is not accepted. That could reduce the flexibility of card use and affect how consumers decide which card to carry and use. On the reward side, issuers fund those perks, points, miles, cashback, in part via interchange and related fees paid by merchants. Changes to those economics could ripple through to the value or structure of rewards programs. In short, you may still hold the card, but how usable it is and the value you get may shift. For merchants, they've long argued that interchange fees and accept all cards rules put them at a disadvantage. If they get greater flexibility and marginally lower costs, that could improve margins, especially in low-margin retail. For Visa and Mastercard, they're balancing merchant pressure, legal risk. This stems from lawsuits dating back to 2005, and the need to maintain robust rewards ecosystems, which drive card usage. The settlement, if approved, signals a shift in bargaining power and could set precedent for other card networks and global markets. This is not yet finalized. The deal still requires court approval and may be subject to changes. The reduction in fees is modest, around 0.1 percentage point, and spread over several years. So while symbolic, the immediate financial impact may be moderate. Big merchants continue separate litigation and may pursue damages beyond this settlement. From a policy perspective, this could influence how regulators and legislators think about interchange fees, card network dominance, and merchant consumer rights going forward. Given that you're writing policy-oriented analysis for Pakistan's context, while this deal is US-centric, it offers lessons for emerging markets about how interchange rates are set, how card networks' rules interact with merchants, and how rewards programs get financed. Policymakers in Pakistan could watch for potential shifts, e.g., if card networks globally shift business models or merchants press for concessions. Local banks and regulators may face pressure to revisit interchange, acceptance rules, and rewards funding. Also, as Pakistan's economy and digital payments evolve, the balance between merchant cost, consumer benefits, rewards, and network profitability is a live policy issue. In short, this proposed settlement between Visa, Mastercard, and merchants could change how rewards credit cards function in practice, by giving merchants more power, reducing fees slightly, and possibly limiting acceptance of high-fee premium cards. For consumers, it means potentially fewer card options at checkout and possibly altered rewards value. For merchants and payment networks, it shifts some dynamics of card acceptance economics. If you're keen to stay on top of these developments, especially how they ripple into regulatory landscapes, fintech, payments policy in Pakistan and globally, be sure you're subscribed. Hit that like button if you found this breakdown helpful. Drop a comment with your view. Will your next purchase be impacted? Have you been turned down for a card type? Let me know. And if you found this video useful, share it with a friend or on your social feed.